Also connect with Deven Choksey, who's joining in on the show. Hi there, Deven. Lots to talk about, but let's begin then by getting your take in on the markets in trade yesterday. And you did have that outperformance that was evident, despite the fact that we wrapped up flat in some of those metals as well as high beta realty stocks. What's the view on these two sectors and the outperformance?
Everyone, good morning. Real estate in particular, I think remains absolutely convincing story going forward as well. The amount of, I think, the new areas which are getting constructed and at the same time being sold, that gives us an indication that there is going to be an increased amount of revenue book coming in from majority of the developers, the companies which are into the housing development business particularly. So for them, I think the business condition looks absolutely robust. Along with real estate, I think the ancillary sector looks, I think, pretty convincing. Most of the building material segment companies, I think they are showing relatively higher amount of growth, be it in the cable and wire business, be it in the ceramic business, be it in the electrical business or white goods business. Wherever you look at them, I think they are basically looking at least around 20% plus kind of a growth. So that again gives a conviction that there is going to be higher amount of demand continuing. And at the same time, as the economy progresses, I think the larger amount of growth is coming in the real estate. The metal commodity per se, I believe that I think the worst is behind them. Demand condition remains absolutely buoyant. And according to me, I think most of the companies which are basically, I think, in the base metal production business are seeing the stability on two counts. One, on the demand side situation is, I think, definitely remaining convincing. On the other side, the input cost, energy cost, I think they remain convincingly low. And as a result of it, margin protection is being seen in this kind of a situation. So we remain distinctly positive about the prospects, and fortunately, some of the metal companies have corrected in the price. So that gives an opportunity for further headroom going forward.
Okay. Meantime, let's get in a take then from you, Deven, as to what the outlook is on HCL Technology with the kind of guidance as well given, talking about how their margins may see a modest drop. They're expecting growth and the deal pipeline remains healthy. What's your take?
Well, I guess I think the most of the IT companies have a similar story to talk about. On one side, I think they're aggressively bidding, I think, for the contracts and larger deals. On the other side, I think there is a relative amount of, I think, margin compression happening. But at the same time, I think the ability to deliver faster, I think, is happening more because of the adoption of the faster adoption of the generative AI as well as the predictive AI platforms within the environment of IT development. So from that perspective, if you look at it, I think the margin drop may not be so sharp, but at the same time, the higher amount of contracts are being won by many of these companies, and that is a positive side because these contracts are not only for 3 to 7 years kind of a pipeline that you are creating in every contract. So that is where probably you are much better off in this kind of a situation. Though I agree that I think there is not going to be an aggressive ramp up into the order position or the new contract one. But at the same time, I think most of the worst it seems to be behind more IT companies. And from here on, I think we are likely to see the higher amount of top line led growth coming into the books of most of the IT.
Right. In fact, Devin, I just want to pick up the point that my colleague was just highlighting the fact that it seems that the oil ministry has actually sought a withdrawal of windfall taxes and how beneficiary this could be to the likes of both Reliance as well as ONGC. We've already seen the big run up in ONGC take place.
Yeah, Ishna, I guess I think this particular tax was imposed largely for the higher amount of I think gain that these companies have been making. And I think it was not a right tax at all, I think, even when they levied this tax. But nonetheless, I think this particular tax withdrawal situation is definitely I think, a good thing for many of the companies. Only wish that one would have that the governments do not tinker with this kind of taxation time and again, because that puts off the entire business growth program for many of these companies. Had you allowed the money to stay with many of the oil companies today, I think quite possible they would have ended up I think, taking up some of the larger projects. I think which somehow or other I think with this kind of calculations they would not do so. So in my viewpoint, I think the name of the game should be consistency in the policy. should you continue with, I think, a proper policy, then probably these companies which have larger potential can definitely perform well. In the near term, the stock prices are doing what they are supposed to do. I think they are reacting positive. And in my viewpoint, I think that positive movement is also because of the fact that government is unlikely to dilute or monetize their holding into money of the public sector companies before 2027, just 2 years ahead of the elections, I think 2029. I think before that, I think they are unlikely to dilute. So, given the kind of supply side restrictions, or maybe I think the ease on the supply side probably at this point of time, wherein I think the fund would like to buy into the portfolio of the stocks. So that is where probably I think the stock prices are technically moving up while keeping the other fundamental aspects same as far as I think the businesses are concerned.
Bunch of other stocks which were in focus. Voltas, of course, one case in point. They came out with an exceptionally strong first quarter. It was a good 31% beat that they had after 9 consecutive misses. Of course, it was that extreme heat spell or heat wave across the country, which did bump up their volumes for sure. And they managed an EBITDA of 423 crore rupees versus an average street estimate of 325 crore rupees thereabouts. So that was definitely a big beat. And as was Jubilant Foodworks, in fact, brokerages after their numbers said that, you know, the worst seems to be behind them. After a series of misses once again, Jubilant did manage to meet the forecast with the same store sales growth actually turning positive. The delivery was strong and may have benefited from the one-offs, but dine-in is where some work is still needed. Deven, I don't know how closely you've been tracking either a Voltas or a Jubilant Foodworks, or for that matter the entire QSR space, but any readings here?
So maybe I think I can talk more on the Volta side. The white goods in particular, FMEG segment, as we call them as, I think have had a fantastic run in April to June period, largely because of the summer effect, as we want to call it as. Certainly, I think on one side there is a summer effect, on the other side there is an increased amount of spending, discretionary spending by the households. So, which is also resulting into the higher amount of uptake for most of these companies. If you look at the top line and the directions coming in from most of the white goods companies, they are all equally bullish about, I think, 18 to 20% kind of a growth in current year as well. Come festive season, and I think you are likely to see even better numbers on some of the product categories. So, in my viewpoint, I think the business condition remains promising, and I think growth is likely to sustain for at least next 3 years plus. So, on that basis, I think one could possibly argue for buying this company into the portfolio. However, having said that, the valuation wise, I think most of these companies are adequately priced. So the better time would be to buy when probably market gives some kind of a correction or a degree of correction, which is a little sharper than normal. That would be the best time to pick up this kind of company with the portfolio.
This has now made it to the MSCI list, so bound to see some inflows coming in there. Deven, what did you make of the MSCI rejig? Some very interesting names out there. While, of course, Bandhan is exited out of the list, there's RVNL, there's Vodafone Idea, there's Dixon, Oil India, Prestige Estates, Oracle Financial, and even Zydus Life Sciences, which has made it to the index.
Yeah, I think most of the names are already showing, I think, good amount of traction, the growth in their own respective business. Zydus Life Science particularly, I think, looks interesting to us because I think we find this company quite an exciting one from early stage itself. The higher amount of conviction in most of the businesses on the fundamental side is remaining the conviction point as far as buying them into the portfolio. And that's where probably I think we like to buy into companies like Zydus. Maybe I think recent times the market has moved up along with all of the pharma companies. But that's a time when I think probably you look at this kind of companies when it's available at a lower levels. We remain convinced about the investment, not adding a fresh at this point of time. But I think this MSCI move definitely seems positive for the existing investments.
100 points higher for Nifty. Kunal, it should not happen, right? GIFT Nifty was down, pre-open rates are 100 points higher, so obviously it will not be a 100-point gap up.
No, I think I mentioned in the morning that the global markets are coming back towards a 50% retracement of the previous week Monday sell-off. So for example, Nikkei is back at 35,500 something. And from the top, I think it corrected by 11,000 points. So from 42,000 to 31,000 approximately. So I think many of the indices are coming towards that 50% retracement, and it's bound to be that our markets in the next couple of days should try and attempt towards that 24,500 mark. Now, whether it becomes successful as an attempt towards a breakout, that would probably be determined more as a global synchronized up move. If many of the global indices come together and then head towards this breakout, then even our markets would eventually do it.
So I'll just use my calendar just to prompt a date to my producer so that we can establish it. And what I want to see where markets were on 2nd of August, right? Because 5th of August you fell. So 2nd of August was the Friday where everything was good. Then came that brutal Monday, which was 5th of August. So let's look at Nifty from 2nd of August, please. And 24,718, Kunal. And we have only a 400-point gap left. Yes. And then we pretty much would go back to the Friday levels, which Correct. Means that another 400 points, another 350 points more, and we would have retraced that ugly Monday's sell-off.
Exactly.
But for MSCI index, MSCI Emerging Market Index, we're already there. I think you may want to check it. I was reading data in the morning.
Okay,
that the MSCI index has already retraced 80-85% of what actually lost because of that ugly Monday. So a lot of semblance in the market has come. I mean, if I may use the phrase that what happened, let's say, same time last week, now we analyze it, it appeared like a storm, but it has turned out to be a storm in the teacup. What appeared like a very stormy Monday and a scary Tuesday where all asset prices were falling in a synchronized manner, in hindsight has turned out to be more like a storm in a teacup, and which frankly has come and gone. This market has passed 3 litmus tests. 1, election day. 2nd, budget day. 3rd, global sell-off. So there are 3 litmus tests this market already has, in a sense, been tested on, and it has come on the right side. And Deven Choksey, irrespective of what we may cry in terms of valuations, richness of historical P multiples, but the market strength is absolutely impeccable.
Yes, Nikunj, I think, and one more point I think which you must add to it. Last year, SIP has been almost, I think, 8% plus kind of a jump, I think, which you have seen on a month-on-month basis at around 23,000 crores. So I think the force of money which is getting into the system today is helping the market to remain stable. In any kind of a downfall or any kind of, I think, sell-off, this market is definitely, I think, having good amount of backup from the investors. And that is what is more important. Going forward, as we progress with a larger amount of size of the economy, the kind of money which will come into the market would be quite reassuring. And that's where I believe that I think this market is not going to be sold off in hurry. Maybe individual stocks will find some amount of correction, or the preferences would shift to other stocks. But otherwise, I think the markets are likely to remain solid to, I think, on a higher side going forward as well.
Good to have you on board. Thank you so much for joining in and sharing with us your outlook on the markets.
If you like this video, then like, share and subscribe to ET Now.